Welcome everyone to this the Trader Dream Masterclass. I'm Petr Jimmy, the founder of the Trader Dream, the free platform for the education. I will speak and go through the most overlooked but powerful edges in trading psychology. And specifically, I will speak about the 5 mental habits of consistently profitable traders. And these are habits that you rarely hear about in books or retail education. Let's get started. Now, most traders lose not because of strategy, but because of mindset. And they lose because of the mindset traps. Any kind of strategy will fail without the right psychology around, and professionals play a different mental game. Usually, I've been there for myself. Those traps can be like overtrading, chasing losses, thinking one trade will make me rich, and many other traps. And I also seen how professionals approach it. And on my own, I work for a hedge fund, so I'll also speak based on my experience and give you also my view on those mental habits that really help me to make success and basically become better trader investor. So by the end of the day, you will know what those habits are, and you can start applying them pretty much right away. I think that's very important. Now I have here one interesting thing. I will click the play here. So this is the common development and thinking. So you can see here the strategy and mindset. And I will put like a 12 months horizon. So this is usually how the traders will think in the beginning. They will think that you see here per months. If I click here, you see the first couple of months, the strategy is winning. Bigger percentage of traders think it's about the strategy. Month 6, it's already think it might be psychology mindset. 50% probably like month 8 or 9. And then the mindset, at some point they will think it's mostly about the mindset. Now, it's 100% mindset. I will say it's probably about 50-50. So without the proper strategy, you cannot still make the progress or build success if you don't have a proven strategy that can bring over time results. At the same time, if you don't have a proper mindset psychology to execute this strategy and to keep it consistent, you will also not be able to deliver results. So from my perspective, I will say this is more of 50-50%. So they're both equally important. So let's go to the next slide. The myth of trading psychology. Now, everyone usually says that discipline, patience, controlling emotions, but that's just not enough, guys. And professionals have a different habits, different thinking, different way to establish a whole thing. So I will speak about those 5 habits in next slides. But the one important aspect here is to say is that we have different kind of mindset. So one thing is, if we start in the retail world, another thinking and way of thinking is once you start to think more institutional, which I will explain just in a bit. What is that about? So let's go to the next slide. And next slide will be speaking of the 5 unique habits. So the first one, think in ammunition, not money. So why this is important? Because professionals don't see money as money, let's say on that way. They see it as ammunition. So if you see it as ammunition, it's totally different approach. For example, if you see $2,000 as rent money, every tick will scare you, basically. Every pip will scare you. Every move in your investment will scare you if you see like 2,000 as rent money. But if you see as a 2 bullets out of the 100-round campaign, it's just a part of the mission. So the detachment changes a lot and changes everything pretty much. And try framing trades in units versus cash. Think For example, I used one bullet and I got 99 left. It keeps you calm and objective. And that's a very important. Lots of stuffs around the media and on internet, you will find that, I made this amount of money, how I made from 5,000 to 50,000, and lots of those titles that are just catchy and that will attract attention. In fact, um, people usually, they can post those stuffs to attract people. Most of those stuffs are not really verified. You cannot prove that. But anyway, if you think in terms of money, your mindset will be completely different versus thinking in units and mostly like in bullets. So that's the first thing that really changed my own trading. And this is where the things started to improve a lot in my trading, my career, my 20 years career. So first couple of years were very, very hard. But after I started to change the mindset, improve different habits, the really things really start to change for a much, much better and more consistency. So think in ammunition, not in money. That's the first habit that I will say. Money equal emotions, fear slash greed, ammo, tactical rounds in campaign, each trade just one bullet fired. This is something that also Buffett spoke about in investment, to think more about, if you really have just a couple of bullets, you will think absolute, or just one bullet or a couple of them, you will think about very much, very carefully, watch, research, do all of this, what is necessary to basically make the best decision possible at the moment. So that's not just that I'm saying, it's basically also one of the most successful traders investors are saying as well. So first habit, think in ammunition, not in money. Now let's go to the second one, next slide. So catch your own bias before it catches you, right? And that's very important. People and traders tend to bend charts to fit their beliefs. They try to just find confirmation. They try to do everything just to confirm that, yeah, this is exactly many of, you come with the next day, you want to be bullish, you have bias that you want to be bullish in your intraday trade the next day, and things change and you're still biased, and you have a very hard time to detach of your opinion, your bias. That's a very, very big problem in trading and investing. Professionals challenge their bias before entry. So I was professionals or institutional money. So the way how you challenge is, think about worst case scenario when you make every kind of trade. Think about what is the opposite of your view. Can you make the opposite view? And this is something that I will show later on charts, just some of those habits, and you can see also in terms of charting, but also you can also find in terms of investment. For example, in investment will be, if you find a company, you base your view, let's say, on fundamentals, good good sales, good growth, all of this, all of the stuff is important. But then and there is some key thing, the key product or something, but then something just shift, and your main clue where you actually became bullish or bearish, something changed, and now that's not anymore valid. You, in professional world, in the either trading or investing, you will need to able to adapt and switch, either reduce a lot or just shift to another investment, and basically, or you'll be trapped. So to the devil's advocate drill, argue against your own trade. So always argue against your own trade. Right. And this is the thing what the professionals are doing and what the institutions are doing as well. They argue about their trade. They very carefully craft the stuffs and check before they make execution. And again, they argue against their own trade to see what will be the negative side and the worst case scenario and all of those stuffs. The same thing, the pilots will really go and have alternative airports to land in case if something will happen with the primary airport and primary destination. Okay, so you need to be able to, okay, if this, let's in the trading sense, okay, if I'm bullish today, what will be my scenario where I want to exit if market go neutral for a couple of hours and don't take some specific level? How will handle if market go against me aggressively? How will handle if market just drift away from my entry? What is my potential reversal if I want to basically reverse the trade if market goes in another direction aggressively? So you can basically build different scenarios, and you can be prepared. Is what institutions are exactly doing. So they have exact levels. If this will hit this level, I will do this. I can add if this level will be mad, add into the winning position. I will cut this if this thing is not going here. I will hedge this if market do this or that. So this is the very, very important to catch your own bias before it catches you. That's the second habit for from the 5. Now let's go to the next slide. A sniper mode. I really, sniper mode is mostly about watching carefully market, so trade less, size up more. Usually, for example, in professional trading, especially if you try to catch some divergences or a change in momentum and shift, also in investment, if you try to be early, if you see early signs that is good investment, you can start with smaller portion. So, and later on size up into the very big position gradually over time without increasing the significance of the risk. So that's a very, very important in actual trading investing. So let's say hypothetically, I want to, just example, I want to buy gold today for whatever reason, whatever strategy you're using. I'll not go for the strategies now, or what you'll use investment for investment purpose, what kind of fundamentals and what you'll watch. I will speak mostly here about give you some example that that you can understand clearly. So if you're a trader, and like let's say you have your strategies giving you early buy signal, whatever strategy you're using, okay, and let's say you trade intraday or swing trade, it doesn't matter. So what you can do is you see the early signal, you can basically start with the 20% of initial 20 to 25% of initial size that you want. Okay, so let's say just hypothetically you wanted to your max risk for the day for that trade idea for that signal is $100. Just example, you'll say you have early signal and you want to start with a risking $200 and put the size to fit that in terms of the lots or whatever market you're trading. Okay, or the number of shares in the stock market or so on and so forth. So you can start with a 20 bucks risk. If market will go in your favor and position will be, let's say you risk 20, but you're up 20 now at 20 bucks. Depend of your time horizon. Again, of course, what you can do is you can add gradually into your position. You can add another 20, for example, if things start to improve. So now from the early signal, you have the signal that is looking much better. So you can put maybe 30% more into that. Things progress pretty well. And then the rest 50% you can put later on the pullback. For example, if you bought, let's say, and you were buying out the low. So controlled inactivity is actually quite a big strength, right? So controlled inactivity, most of the time in my own trading investing, this is mostly about being inactive, just watching carefully the order flow, watching the markets, watching for if you watch technical analysis pattern, or if investing, if you watch like an order flow and both technical analysis and fundamental, so you will understand where is a good time to be aggressive. So free bullets rule, only a few big shots. That's the thing, free bullet rule, okay? This is what Buffett spoke as well about. If you have just 3 bullets, use it wisely because you know that you can run out of bullets if you if you don't have any more, right? So Sniper mode is very, very important in both trading and investing. Now let's go to the next slide. The fourth one is forget trades or investments, remember lessons. So amateurs replay wins, losses emotionally. They really replay this emotionally, and professionals erase trades after extracting lessons. So the thing is that what I'm using is I'm using my journal, extract, and delete. Okay, so you want to use your journal, you want to forget trades. So especially if you're actively trading or intraday or swing trade, you can take the notes, remember the lessons, but you don't want to replay that emotionally, and you will always be back. Oh my God, this trade I lost like a week ago, and just be attached with that. Or I lost yesterday. You cannot allow that, for example, one loss will be so much you put in so much into the bad emotional stance that your mood will also change and that you will think about that trade. Either it's a winner or losing position. In a winning side, you can just go into the clouds. You earn very good. You can be in the clouds and think about. Naturally, our brain will think, okay, so the next day, you're very happy. You're because the previous day was very good for you. You were, full of energy, very positive. Usually after those kind of events, usually we have either sometimes the flat or reverse. So also, if you're attached emotionally, then this negative outcome for the very next day after the very good day can actually also have a very negative effect on you, much bigger than it actually is. And this is the thing that forget trades, remember lessons. This can also be applied for investment. So you had investment that it didn't work well. You lost money, you lost time, and in terms of investment, you now, based on this, you're drained and you're very scared about the next investment. You try to question yourself. There's lots of stuff in your mind. And this is a very also common in investing. Same thing, if investment went well, you can be hyped and think about that now you know everything and that the next investment will also be a very good. But most of the cases that's, if the next investments will not be good, and so you can go into the deeper and deeper trouble emotionally, and you can also do lots of bad stuffs around, add into the losing positions, into the losing investments, and so on and so forth. You can basically have a trapped money. So be liquid in mind. This is the fifth habit. Be liquid in mind, not just capital. So loyalty to probability, not opinions, right? So think about probabilities, okay? Now, in technical analysis, probabilities will mean that you have a model. Let's say that you trade Forex or futures. You need to have the model that you will actually tell you what kind of probability you have based on your system, based on your strategy, based on your model. Okay. And from my perspective, if you trade anything like short, mid-term, or intraday, you need to have at least 100, minimum 50 to 100 trades to have some kind of decent amount of data that you can deal with and extract probability. So if you have, for example, 50% probability, and let's say that your average winner is 2 times bigger than your average losing position, you still need to understand that 50% probability is not high probability. And it basically, it's a coin toss, right? Coin flip. So you also know to base on that you need to adjust your size and adjust your risk based on that. Maybe some models will have 80% win ratio, but will have negative risk, meaning that you can, for every dollar risk, you can maybe make a 30 cents, 35 cents, 25 cents. But you have from another side big win ratio. So you have 80 plus percent. So then that's a different scenario. Okay. So you have a high probability high probability, but risk reward is not like in the when you had a lower probability but a bigger reward versus initial risk. So morning reminder is basically always I don't predict. I try to adapt. I try to find what is happening today. I try to watch from the perspective and I try to adapt, not predict. The market and the time will tell as well how the things are progressing. So be liquid in mind, not just capital. That is also fifth habit that really helped me and my own career. So the elite traders slash investors mindset, think about campaign mindset. So that's the one thing. Bias detection, try to uh, put the bias aside, try to think about worst case scenario, try to think about, as I said, in different scenarios, have the levels that you watch, have the timing that also you watch, how much time you want to allow for the trade until you do something. Okay. So if you like, you have an intraday, you're trading intraday and you enter the trade, there is nothing for a couple of hours. You need to have some kind of also time effect where you will say, after a specific amount of time, after like, let's say an hour to 2 hours, if there is no progress or very little progress, you might be able to reduce position or you might be able to exit fully position and focus on something else. So you need to have those set of rules. And yeah, bias detection as well is very important because you want to be able to switch. If you're biased, it's very hard for you to get rid of that bias, right? So if you think about I'm bullish and bullish and bullish, it's very hard for you to trigger a sell, basically a bearish or sell position. Okay. The same thing with investment as well. But let's think about your bias is bullish. And it's very hard for you even to flip the trade to another side as well. Let's say the market start to go higher and your bias is bullish, but then reverse aggressively midday. And if you're biased, you can also, what can happen, you can prolong to exit and cut the loss. You can go into deeper trouble by adding to the losing position. This is the very common stuffs if you're biased. Versus, for example, if you had a plan before that happened, that if you got, let's say you got long, that you had a level where the market will go for aggressively, you won't actually flip position from being long to actually being short for the day. So if you get rid of that bias thing, then you can more easily you can flip and actually be, just flip from watching for upside and having a bull position. And today you can flip if the things resolve like that and tape is like that and all of the levels that you're watching, then you have the plan to flip in case. Selective aggression. This is very important. Think again back into the probability selective aggression. As I said, if you see some kind of the pattern condition that there is a high probability that of the outcome in your favor, then you can be more aggressive. Another thing is you want to be, if you want to add into the position or build gradually your position, let's say either intraday or swing trading, as I said, if you have some early signals that we might see the rotation in, early signal, let's say to just example, to buy the gold intraday, you can start with a smaller amount versus what is your actual full size that you can afford based on your risk parameters. And you can later on add if market progress in your favor. It's also very classic and one very important thing. Micro amnesia. Micro amnesia is what I said. Forget about the previous trade, focus on the next, and take the lessons from from the previous trade, but don't remember them, don't remember the trades emotionally. And so just remember the lesson around so you will not repeat, or you will be a much more better, you'll think much more better in the future, and don't repeat those kind of mistakes or something like that. So this is a Micronesia thing. And again, mental liquidity is, to don't overtrade and to have the mental capital, which is very important, very, very important in actually any business. And so, so if you overtrade, if you just too emotionally attached, your mental capital, it will be gone. So you'll be able very hard even to sleep and all of those stuffs. I went through all of this in my first couple of years, and I'm telling you from my own experience. So those 5 mental habits really changed pretty much everything for me. They changed my trading, progressed much stronger, and established consistency over time. I actually also worked for a hedge fund for a couple of years. So all of the stuffs happened, the good stuffs happened after I changed those 5 major habits. Okay. About the tactics and strategies around, there will be different webinars and courses that you'll be able to watch from beginner to advanced. There will be specific course just for this for the trade management or investment management as well. So yeah, stay tuned, because there's a plenty of stuff that will come in the future. So another thing I need to say about having those 5 habits is as well as think about the worst case scenario. And if you, I will explain about this. Most of the hedge funds are called hedge funds because they hedge their positions around. And if you think on that way, you can also improve your overall profitability and consistency. There'll be different tools that you can hedge with your investment or positions. So I will speak about that, but let's say if we speak about the trading, you can do on different ways. For example, you can, let's say think about the goal. You can buy because speaking about the futures market, you can buy the big contract gold, and then you can sell micro contract just in case of some bigger downside move. You can sell by whatever percent of the main position, but just in case if something will go against you very, very strong, this hedge will serve you and reduce that risk, sometimes even negate, depend on the size, the magnitude of the move against you, and so on and so forth. There's so many different stuffs and the ways to do it. But I'm just saying here that those 5 habits are extremely, extremely important. Now let's go to the next slide. Now, what I want from you, so your next step, pick one habit to apply tomorrow. Pick one habit to apply tomorrow. So again, you have all of the 5 habits. Okay, think about ammunition, not money, biasing, all of the previous that. So pick one habit to apply tomorrow. The next thing, journal progress for 7 days. Now try to pick the habit that you think it will really hitting you the most. Okay, so some of the habits you're familiar, some of the habits you're doing, some habits you need to improve. Try to pick one that really hit you most. Okay, so if it's that, whatever, let's say, think about, just example, think about ammunition versus money. Think about in terms of units, not in dollars or any kind of currency. If that's the thing, try to focus any of those 5. What will hit you most, pick that one and journal the progress for 7 days. Now, important thing to say here is every small shift will matter because it will give you big edge over time. All of those small nuances, small moves that you're in progress that you're making will add and stack over time. Now, depend how much and how actively you're practicing them and how actively you work on them. It will take some time. For some people, it will take more time, for some less time. But the main thing is to work on the habits, pick the one and start with one in journal and follow the progress and how that will affect your own trading and investing. You will see that over time. You will see the progress over time and it will turn on to be like a big edge for you. So this is the main thing that I really wanted to speak about. 5 major habits that really institutionally they're very important and it really changed my own career and my own trading investing. So I hope that I like them and that you will start to work on them. So I don't see any question. That will be all for this webinar. And it's a very, very important one. I think people just they don't understand really how important is this. This is for the trading and successful investing. So this is a big, big subject. That'll be all from me. Don't forget, every webinar, every week, new subject related to either trading or investing. We'll also watch Academy part on Trader Dream. Academy part, I'll try to put a lesson, at least one lesson per week or a couple of lessons per week. And they will have different courses over time to watch for Academy. And don't forget to call your friends, your buddies to join this completely free platform for education for traders, investors, from the beginners to the professionals. Basically, everyone can have a benefit, and there's tons of value that you are learning, and we're growing together as the whole family. So that'll be all from me for today. Thank you all for watching, and see you soon on platform Trader Dream.